Holland throughout the 17th century, precious metal from the New World, Japan, and the other locales were being channeled into the Europe with the corresponding price increases thanks to the free coinage, the banking of the Amsterdam, and the heightened trade and the commerce. The Netherlands attracted even more coin and bullion to be deposited in their banks. These concepts of the frictional reserves banks and the payment system were further developed and separate to the England and elsewhere. England in the city of London, there were not any banking houses operating in the manner recognized as so today until the 17th century, although the London Royal Exchange was established in 1565. 17th to 19th centuries, the emergence of the modern banking, the old town hall in the Amsterdam, where the Bank Amsterdam was founded in 1609, painting by the Peter Sanderdam, and by the end of the 16th century, during the 17th and the traditional banking functions expecting deposits, money lending, money changing, transferring funds were combined with the issuance of the bank debt that served as a substitute for gold and silver coins. New banking practices promoted commercial and industrial growth by providing a safe, convenient means of the payment and a money supply more responsive to the commercial needs, as well as by the discounting business debt. By the end of the 17th century, banking was also becoming important for the funding requirements of the combating European states. These would laid on the government regulation and the first central bank. The success of the new banking techniques and practices in the Amsterdam and London helped spread of the concept of ideas elsewhere in the Europe. Goldsmiths of London. Modern banking practices, including the fractional reserves banking and the issue of the banknotes, emergence in the 17th century. At the time, wealthy merchants began to store their gold with the goldsmith of London, who possessed private wallets and charged a fee for their services in exchange for each deposit of the precious metal. The goldsmith issues recipients certifying the quantity and the purity of the metal they held as a baileys. These recipients could not be assigned, only the original depository could collect the stored goods. Gradually, the goldsmith began to lend the money out on behalf of the depositor, which led to the development of a modern banking practices. Promissory notes, which evolved into the banknotes, were issued from money deposited as a loan to the goldsmith. These practices create a new kind of money that was actually debt, that is goldsmith debt, rather than the silver or the gold coin, a commodity that had been regulated and controlled by the monarch. This development required the acceptance of in trade of the goldsmith promissory notes payable on demand. Acceptance in turn required in general belief that coin would be available, and the frictional reserve normally served this purpose. Acceptance also required that the holder of the debt to able legal to enforce an unconditional rights to payments. It required that the notes as well as drafts to be negotiable instruments. The concept of the negotiability had emerged in fits and starts in Europe money market, but it was well developed by 17th century. Nevertheless, an act of parliament was required in the early 18th century to overrule court decision holding that the goldsmith notes, despite the customs of merchant, were not negotiable.